Okay, folks, welcome back. This is our economic calendar for the week to come, week ending October 18th, 2019. On Monday, there's an absence of any real economic drivers. So we have our filters on for Canadian dollar, euro dollar, British pound, and dollar. On Tuesday, London Open, we have medium impact GBP average earnings index. And 5 a.m. on Tuesday, we have medium impact euro dollar zoo economic sentiment. On Wednesday, 4:30 a.m. London Open, high impact CPI for GBP and medium impact PPI GBP. On Wednesday's New York Open, 8:30 a.m. we have high impact CPI for Canadian dollar. We have high impact dollar index core retail sales. On Thursday, London Open, GBP high impact retail sales and credit condition survey medium impact for GBP. 8:30 a.m. Thursday, New York Open, medium impact manufacturing sales for Canadian dollar, high impact dollar, Philly Fed manufacturing index and building permits, medium impact for dollar, and 9:15 a.m. medium impact industrial production for dollar. And finally, at 11 a.m. on Thursday, we have high impact weekly crude oil inventories that will be related to dollar CAD, so you can be practicing dollar CAD on Thursday around 11 o'clock. And on Friday, much like we have on Monday, we have an absence of any economic drivers to speak of, closing the week early from the economic calendar standpoint. Let's go over to the charts and see what we got. Okay, folks, we are looking at the dollar index. This is our daily chart, and thankfully, we've seen some volatility. We were looking for a continuation on Friday of what we saw on Thursday, running below the sell side liquidity pool here. And I mentioned we would probably see large range days. We were welcoming large range days to get inside of this range and try to run through to the sell side liquidity, which remains the downside objective for the week to come. And if we get some acceleration below here, I don't think this is going to be the low of interest. It'll be these equal lows as well. So think about this low all the way up to the highs. The bulk of the liquidity would be resting about midpoint, and that's in here. This is just a near-term draw on liquidity, so we still have a little bit more downside to go, in my opinion. Now, we could see it return back to this low and retrade back to here and then expand lower. I'd rather see it not do that, okay? If Monday we open up here, trade down, but don't break the low, and that would likely set up a Tuesday retracement back up into, this would be potentially a fair value gap. That's low probability. I would rather not see a fair value gap form here. I'd like to see another expansion, big large range candle blow through these lows and then create some kind of a big candle down, then create a fair value gap to trade back up into these lows, then expand down to here. That's what I would rather see. To me, it would make better sense to do that. And the reason why I say that is because we have all of this consolidation in here. The market spent multiple days in this big block of price action. Because of that, it's basically a balanced price range. So we want to see it make a meaningful, aggressive run through that to target this liquidity. And then once it gets below here, find some formidable resistance, if you would call it that, to get back above these lows. That would leave us open for a low resistance liquidity run for these equal lows here and further upside on foreign currency. We're going to drop down to an hourly chart for the dollar. We have, let me zoom in a little bit here. Here's that mean threshold relative to the daily bearish order block. We saw it wick through that, but look at the buys of the candle. It was really respecting that, which is nice. We have an imbalance here. SIBI comes back up, rebalances that. Distribution, bearish order block. Look at the volume imbalance in here. It trades right back up into that. Nice distribution, fair value gap. This low, extend that out in time. Right in here, we have a volume imbalance. Trades up into that and the fair value gap, then expands lower. Equal lows, we'll see a run on liquidity and it expands down through it. So really nice hourly price action on the dollar index. Again, we're looking for best case scenario, just a rollover and continuation. There's really no imbalance in here to speak of except for the small one right there, which to me they could leave that open. It could be just a breakaway gap, and I'd like to see it remain open and trade lower. Moving on into Eurodollar. Eurodollar, go back and watch a couple of the reviews this weekend for Euro. By doing that, you'll hear and see the level here with the bullish order block saying that if we remained above that, as long as we did that, we'd be bullish on Eurodollar. Because we had these equal lows here, we swept through it. We had two stages of running on liquidity. You had these equal lows, which would obviously draw your attention to it for sell side liquidity pool. The liquidity that was pulling below these equal lows, building up a big base of sell stops. They rated those initially, then came back above these equal lows, and then slammed it down one more time. So we had 1, 2, as I mentioned in previous recordings. I think I've mentioned it on a chart, and actually, where you see me talk about the two stages that it went through on this liquidity pool. So minor correction there, but it was shared in detail for the forum posts. And if you go and study that, you'll see that we had remained above the bullish order block. Here we hit it, and now we're rallying. Now, the initial level was this equal portion in here, which we saw on an hourly chart. The next pool of liquidity for buy side is here, and then the imbalance in here. Okay, so we would take us, let's see here, this would be there. That would completely rebalance to 111.40. So that's a level to watch as it run above this relative equal highs here and here. Now, some of you are new, saying, well, this doesn't look equal to me, because the wicks are going to be slightly different. I challenge you to look at the 5th of September 2019. Your high won't be 110.84. It's going to be something else. It may be closer to this candle's high here on the 13th of September. When I talk about relative equal highs and lows, they won't always be so textbook equal like it is here. To me, this is relative equal highs. Pool of liquidity in form of buy side liquidity would be resting right above here, and then we have the imbalance over here, SIBI. So sell side imbalance, buy side inefficiency, and we'll look to see it trade up into here. Now, look closely. Right on the other side of this SIBI, we have this big candle. So notice this candle's high right here, and then this candle's high here. All of this in here is a balanced price range. Okay, now I'm getting ready to take a big leap ahead in pushing you in your understanding. This is a buy side liquidity pool. Everyone that's familiar with this basic ICT stuff knows that, above an old high and below an old low, when I talk about it, we're looking for those areas to be purged or traded into. That could be a new entry, or it could be a target or destination for a previous position that you're already in. This is a balanced price range, and just because we go above this buy side liquidity pool and fill in this imbalance, they would see that and assume, okay, well, that's probably it. No. If we go above here, they're going to want to take it above this high here, because this is a balanced price range. And just to stop on this candle's high, which comes in at 111.08, basically call it 111.10. In here, it's balanced, and it's essentially these equal highs here and here with a run up and then a run down. So it spent time here on both sides. Okay, notice the candle's body goes up, and the next candle over here, all the body goes down. So price has been really efficiently offered between essentially this 111.40 level, and we'll just call it 111.12. Let's see what the high is on this one here. 111.5. So basically 111.12 to 40. Okay, so in that area, it's balanced and rather efficiently offered on both the buy side and the sell side. Okay, so this exact formation and price, this is exactly what we're looking for a rebalancing to offer efficient delivery of price. Because it's visually seen and represented here in the daily chart, both up and down with the candles, not wicks, this constitutes a very clear balanced price range. Now, what that means is, just simply because we have buy side liquidity above here, we aren't just looking for a run to this level here and then stop. If it's going to go above here, they're going to expand it and really run for this high, because this range has been balanced. So what is existing above that? This short-term high here. Okay. Now, depending upon how much speed and distance they cover to get to this level, we have these relative equal highs. Okay, so then that's the next intermediate term rather, draw on liquidity, and then right just above that we have this really clear, obvious level of clear equal highs. 1, 2, 3. So there's a huge pool of liquidity around 112.70. Okay, 112.70, 112.80, and there's 112.83. So basically we'll call it 112.85 to 113 big figure. Big layered pool of liquidity. It may not look like it's obvious while it's down here, but these are things that we talked about when it was down in here. Okay, so just be mindful that this could be the low of the year, and upside could really be the focus going forward for the coming couple months, which is our quarterly analysis. So let's drop down into a hourly chart. All right, so price drops down into this low here on the 8th at 109.40. I'll put the daily dividers on. Then on Wednesday, we had a nice run higher. We mentioned this retracement back into a imbalance after taking multiple layers of sell side liquidity. No one was really being permitted to go long in here. They kept taking the stops, and finally on this low here, we traded into a 5-minute fair value gap. I'll go down to a 5-minute chart in a minute, but then we saw price start to move higher. Institutional order flow entry drill here, relative equal lows. They ran that into the 110 big figure. I mentioned that last night in our bonus video, and we would see these equal highs be targeted, and we got that as well. It takes time, folks, to let the market do what it's going to do, and as I mentioned throughout some of the tweets that I did in very infrequent number of tweets, this is a very low volume tweet week for ICT, and I kind of want to like move in that direction. I don't want to spend too much time there. And the things I mentioned this week were really focused on keeping you dialed in with patience, because if you're new, it's very easy to talk yourself right out of this game. Okay, if I'm not giving you something to work with, it feels like, well, he should know better. And then once I get information, I tell you what I'm looking for, and it happens. Okay, so we saw that on Thursday, we saw that on Friday. Nonetheless, the things that are going to keep you focused is by keeping a journal and journaling the things that we're looking for, and then go back in after the fact and annotate your charts and remind yourself in those charts, in your annotations, that we were looking for, but you're going to use the language that you were looking for, not we, you were looking for, because you have to personify these things in your own study. You can't just say ICT told me or ICT told us. Don't do that. You're programming your subconscious in the best way you can, okay, by attributing the experience you're gleaning to yourself, okay? And it sounds kind of weird, but what you're doing is you're priming yourself, okay? And you're going to use language like you seen these things yourself coming, okay? And what happens is your brain sees the patterns, the way the candles form, the way the ebb and flow of the delivery of price. The commentary is retained in your subconscious, and then what happens is, by a sheer recollection, subconscious recollection of memories, okay, that you're programming your brain with, okay, you're giving yourself false memories, And it sounds kind of weird. You're like, oh man, this is getting weird. But what you're doing is you're absolutely forcing experience into your subconscious that you really don't have or didn't do. And what it does is it speeds up your development. And what happens is, because you're recording it in your own annotations and your own language, and you're attributing it to yourself, and you're seeing examples after example every single week, because you're giving yourself self-talk, okay? SELF, self-talk. You're conditioning your subconscious to remember things as an experience when they really weren't. And you're forcing that perspective in your subconscious. So by having all of these primed perspectives on experiences you really didn't have, the journaling conditions your subconscious mind into remembering things that you actually didn't do, but your brain will remember them as, okay, I've seen this before. And your annotations in your own words, because they're your own words, they're going to be drawn upon as experience. And what's your experience going to lead you to? That positive focus on what you're supposed to be looking for, the pattern, the logic behind the pattern, the things I'm telling you what should happen in the market and why it should act and behave the way it does, and then you see it in your charts. All of those things become more meaningful to you, and your brain will see the chart as it's happening live, and it'll draw you back to a memory. It's a false memory, but it's programming your subconscious with my experience and your own annotations, and it will speed up the process. Now, it's not going to take you to 2 months and you know what I'm doing, okay? It just means that you're going to speed up your learning curve, because you're doing that practice every single day, and you're doing it as a reflection on the previous week on weekends. It could be a Saturday for you, or it could be a Sunday, but you want to spend about an hour a week on the weekends when the markets aren't trading and refer back to your charts and your annotations and your study journal. If you do not do this part, if you think that this is, a waste of time, or journaling is dumb, journaling is stupid, I need to be looking at the charts, I need to be trading with a live account, all these things that other people say doesn't work. Okay, it does not work. The things I put you through and the things I tell you to do absolutely work. And it's the only way you're going to properly activate your reticular activating system, which means, you ever buy a car, and all of a sudden, as soon as you buy it, you see it everywhere, and it feels like everybody copied you. Now they all like the same car and bought the same car you did. Those cars were always around you, but because you bought it and you've made a decision that was emotionally charged, okay, it was meaningful to you. That car was meaningful. You attributed a worth of some kind, and that it translated to a status symbol for you. And that may not be a status symbol for wealth, but it may be a status symbol for, it communicates your personality. It doesn't have to be a very high expensive car. It could be, an old classic. It doesn't have to be a hot rod. But that phenomenon is simply an evidence of your reticular activating system being queued up for something that you have made significant in your subconscious, that particular car that you went and bought. Nobody went out and said, hey, look, Michael bought this car, so we all got to buy it too. It's normal. Everyone goes through this. So women have this a lot. My wife will tell me, hey, I just bought these shoes, and I go out and I'm in the stores and I see these shoes everywhere now. So it's like everyone went and did what I did. I said, no, it's what I just explained to you. Her reticular activating system has been queued up because she's made a decision from an emotional stimulant of wanting to feel prettier because of these particular shoes. And now, when she's out in public, her eye goes right to those shoes because it's a meaningful experience in the past that has meaningful impact to her subconscious. This is what studying and using a study journal with charts and using your annotations and using my experience, when I say the things I say, you want to record it like you saw it coming in your charts. And by doing that, reflecting on them every single day, and then at the end of the week, spending about an hour going through those charts again and reading those annotations and reliving those moments, okay? But hearing your own internal voice. Like if I were to ask you to say your full name, okay? Say your full name and name all your children or name your spouse's name, but do it in your mind. Don't say it with your mouth, say it in your mind. That voice is what you're going to hear yourself say all those annotations with when you're looking at your charts. You're not saying it outwardly, audibly. You're doing it internally. And what happens is, over time doing this, you condition your subconscious and you build up sensitivity so your subconscious will allow, when your brain's seeing the chart, it will allow you to filter out all the other things that aren't really important to you. And your brain will go right into overdrive when there's that same pattern that you've looked at, made annotations over, and it will draw your attention to that one, okay? It sounds weird, it sounds like science fiction, but I'm telling you, this is exactly what you're supposed to be doing. This is the work, okay? If you do this for 30 days, 1 full month, I promise you, you will see the fruits of it, and you'll get addicted to it because it'll start making more sense to you. If you're just watching my videos and you're just listening to me drone on about things, you're not going to learn here. Okay, let's be honest. You're wasting your time, you're wasting your money, and you're not going to learn. You need to do the things that I'm telling you to do, and if you don't do that, you're not going to get good at this. You might as well just go start chasing some indicator system, go find somebody else that's supposed to be good, and spend your time and energy there, because this is going to require work, and the work is what I just outlined here. Okay, so a little bit of psychology there, but it's 100% not found in books, okay, but it absolutely works, okay? It absolutely works. That's how I got this understanding, because I had to bridge the gap between what I thought I understood and then what I actually saw in charts. And once I blended those two together and turned retail upside down, everything made perfect sense. But I still had the problem with the person between my ears, okay, messing it all up. So I had to program myself, much like a computer program. I had to condition myself to filter out all of the bad syntax errors, get all that crap out, and focus on all the logic, okay, that goes behind choosing the proper setups. Because unless you condition yourself to understand what a proper high probability, low risk, low resistance liquidity run looks like, by seeing example after example in hindsight and annotating them, you're never going to see them live. You're never going to execute on them because you have not conditioned yourself to see them. It's the same analogy I've given multiple times before, where a hunter or a tracker takes someone that's green, that they've never done that before, out into the woods, and they say, okay, what is that on the ground? They know what it is, but they're asking the person with them what that is. It's a footprint. It's a squirrel print, it's a deer print, it's a bear print, whatever. The long and short of it is, until you see enough of those impressions on the ground and seeing an example of it and having someone with experience go over that, they're not going to learn how to track their prey. They're not going to be a hunter. They're not going to be able to read the clues that nature is providing for them to get their next meal. So just like trading is in that regard, there are certain patterns that repeat themselves in price action. And unless you take the time to really condition your subconscious mind to receive it, because it's not simply you're looking at charts and like a deer in headlights, you're staring off into space and you don't know what you're looking for. That's retail. But when you're smart money, you have conditioned yourself to only filter in and filter out specific things. You want to allow your brain to pull in the setups and see them as they happen when they're legitimately there. You're not looking for head and shoulders patterns. You're not looking for ABCD correction patterns and all those types of things. You're not looking for Elliott wave stuff. You're looking for very generic, specific criteria and signatures in the algorithm that repeat over and over again on all time frames. So because you'll have a large body of sample sizes with very specific detailed annotations that you're going to record in your own words, You want to paraphrase the things that I say around the conditions that would lead the market to behave a certain way. But you want to frame it in your own words, in your own charts, and then on the weekend, you want to read that out in your own internal voice. And I know it sounds like I'm just repeating myself over and over again, but it's important for you to understand this, because if you don't know what I mean by it, when I say you need to reflect and do the work by annotating your charts and study, that's the studying part. That's the thing that you're supposed to be doing. I guess the magic behind it all is that you're priming your subconscious and you're fueling it with memories that aren't legitimately yours. You're tricking your brain. It's really what you're doing. And what happens is, by conditioning yourself a couple weeks, 3 weeks, 4 weeks, your brain will have all of these experiences and it'll remember it like it did it, but it really didn't. But the things that it focuses on, because you have emotionally charged these conditions, what it looks like by pattern and what it means by logic, what these patterns mean. And you never, ever, ever put negative things in your chart. Never say, oh, I blew it, I missed this one, I messed this up. Never, never do that. It's important to always speak on the positive side. And when you do see things and it was legitimately there, you really want to sweet talk yourself there, because what it's doing is it's rewarding your subconscious, and your brain tends to avoid uncomfortable things. Okay. It's like a child. If you have children, you'll know exactly what I mean by this. When you're trying to tell your child that they cannot do something because either it's going to hurt them, it costs too much money, you're not willing to waste money on it, or you can't do it simply, period, they block that out. They have selective hearing. But tell them they can have a candy bar, tell them that they're going to have a new toy, tell them they're going to get a video game, tell them they're going to get to go to the park or have some kind of amusement. They're all attentive. Their ears are perked up. They are, yes, mommy, yes, daddy. They're the model child then. Why? Because they have something they have emotionally charged up as a memory. They've been to that park before. They've had that candy bar before. They had that stimuli that makes them feel good. So they're really interested in that. So when you annotate your chart, you have to really provide yourself with positive self-talk. It's not just simply, this is a bullish order block, it went 60 pips. No, you need to say things like, this order block really performed well. It's exciting to see these things pan out over and over again. I saw this happening and it transformed my perception on price action, and it happens over and over again. You see what I just did there? I gave myself an annotation idea to put in my chart, and I fueled it with a memory as if it happened, but it really didn't. You were at work. You were at school. You were sleeping at time. You're giving your brain a false memory. But that's the only way you're going to short circuit your brain in thinking that this is going to take forever. So therefore, you're not really studying. You're looking at charts and you're hoping that I'm going to tell you to buy here, sell there. Okay, and I'm not going to do that. I'm telling you where the setups are going to form, and then you are supposed to study there. That's why people quit here. They quit because they want that little piece of candy placed in their hands and say, okay, this is what it feels like. You're going to do everything I tell you to do, and then it's going to be the same thing next week. No. I tell you where they're going to form. You study it. Then you go into your charts and you annotate your charts. And what happens as a result of that, you learn what price action is going to do next, because you have conditioned your subconscious. You've done the work that I can't do for you. No mentor is going to be able to give you what you're looking for. It's never going to be delivered. Okay. I can get you to where you want to be, but it requires you doing the work. I'm going to show you where it's at, but you have to absolutely do this part of it. If you don't, you're wasting your time, you're wasting your money, and you will not learn this. Okay. It's as simple as that. But if you do these things, I promise you, you will get far more than you expected before you joined this mentorship. So you had an idea in your mind about what you should have, what you should learn. You're going to have your whole perception of what's available, what's possible. All of that's going to transform. As soon as you get one pattern that you understand what you're doing with it, man, you will get ignited. Your passion for study, you'll be in this thing every single day, pouring over charts, looking at every time frame. You will turn into a beast. Okay. But right now it's hard to stay motivated. It's hard to say, you feel good about what you're doing because you're still learning, and that's all normal. Okay. So I kind of wanted to bring this up because I got a really good question about what it is that you're supposed to be doing from a psychological standpoint while you're studying. And it's basically that. Okay. So anyway, price did in fact run of these equal highs here. And let's go down to a 5-minute chart. Here's the 5-minute chart. We had a buy side liquidity pool here at 110 big figure. And then the buy side liquidity pool here at 110.30, which we were looking for. And then the next draw on liquidity was 110.65, 110.70. And here's the fair value gap that I mentioned on the trade down into that. We mentioned all this business here. This was Thursday's price action. And I said on Thursday's video, on the bonus video I gave you, which we don't normally do, and I did a Monday video, which we don't normally do. It's only because the conditions of the marketplace were just really, really fickle. And I wanted to kind of fill in those gaps because just a Wednesday and weekend review wouldn't have worked. Okay. And so when there's times for that type of condition in the marketplace, I will provide more content than we normally are expected to do. So I promise you a Wednesday video and I promise you a weekend review video every week. But sometimes, like in these present conditions, you'll get more than you actually paid for. So hopefully you found those extra videos insightful, but nonetheless, I mentioned that we had these equal lows here and we trade back down into the big figure. We saw that drop down here, cleared up the sell side liquidity that was created here, traded down into the big figure 110 and expanded up. Market structure break, traded in here, back into a breaker. See here? Watch this. Low, high, lower low. In here, that's the breaker. Trade that, not traded, but draw that out in time. Trade right into it again, and then there's another expansion up. They have left equal highs here. We traded back down into the 110.30 level here and consolidated into the close for the week. I like the buy side liquidity pool that they have engineered here, and it takes us up into that 110.70 level. So we'll be watching that next week. Again, we have no economic drivers on Monday, so it'll be important to see what we do on Sunday's opening. I'd really like to see it open up with a gap up, come down, fill that gap, catapult whiplash patterns, and then expand up. Those patterns were taught in free tutorials, and I simply don't have the videos where they were at. So, but I talk about it in the mentorship. I just don't know exactly where I have it. But nonetheless, it's just basically a gap fill on Sunday's opening and then sending it in the direction of the gap once it's filled. That's what I'd like to see happen on Sunday. It's not necessary, but that was the ideal scenario I have for my notes on Sunday. When I see it open up, I would prefer to see Eurodollar and cable open up on a gap higher from where it closed on Friday. Some kind of a gap higher, fill it, and then run these equal highs. That's what I'd like to see. It doesn't mean it's going to happen on Monday, but Monday and Tuesday, I'd like to see that type of event unfold. Moving on into cable. Look at this beast. All right, so I was looking for the bullish order block in here. I would rather had seen it trade down here. It would have been nice. But on the 10th of October, there was a Anglo-Irish summit or something like that. I think that's what the Newswire said. And there was some talks about some positive turn for a potential deal for Brexit. And that really added some interest in cable again. I told you this week on Twitter, I felt like something big was about to happen, and I just couldn't really put my finger on exactly what it was. But here's what it was. So big, huge move. That was a big old move. 122 to 127. Okay, I mean, that's 500 pips in 2 days. That's enormous volatility. That's huge. That's what we needed, though, because now everybody's talking about FX. There's all kinds of imbalances on the lower time frames. It's a beautiful condition to be in, and I hope it continues. These last couple months of the year generally are always some of the best trading because we have the last bit of the year. Greed is at its peak, and any missed opportunities throughout the year, there's going to be a rush to get some kind of a yield and return on deposit. So there's speculative capital out there, and to get that speculative capital into the marketplace, they have to engineer big movement, because big movement does what? It gets attention. It gets the markets churning, and that's what they need. They need to have interest, because we've been in a really low volatility condition on Forex for months. Seeing this in 2 days, wow, that is like a sugar rush like crazy. I do not see this as a big run up here to sell off. I really like the idea this is a little bit longer term, intermediate term play. Again, going back to that dollar index on the daily chart, which I'm not going to do now, but I mentioned in old recordings, in recent market reviews, I said that we can come back up into here. That would be an area where I would like to look for it to trade up into around in December. Well, look how fast we got up to this level here at 127. And to get above here, we're only talking about 83 more pips. Yeah. And so, I mean, I called December as a time frame for this area in here, and I don't remember exactly when that was. But trust me, it's in the recordings, and whenever I say certain things, if I give you a timeline when certain things are going to happen, you need to make sure you record that, okay? And put an annotation in your calendar for like that particular month. Say, hey, look, we're looking for this level to be traded to. Now, there's going to be times where it doesn't happen. Don't misinterpret what I'm saying here. But I did talk about this area here potentially being a run into during the December month of this year. This big, huge 500 pip plus move in 2 days is a huge injection of volatility, interest. It has everybody talking, and it's beautiful because it happened on a Friday, Thursday and Friday. So now everyone's looking at their news wires, everyone's looking at their financial publications, and they see this. Regardless of what Brexit is or isn't, okay, because I don't understand it personally, it just fuels the fire. So even though I was looking for it to trade down into this bullish order block, that would have been an ideal scenario for me. But I told you, I said, I don't know. And I warned you all. I said, listen, if you trade this, it could really hurt you fast. And it was moving 100 pips in minutes. Okay, and it's like, that's quick. And if you're offside, wow, you're really going to get hurt. So let this be a warning to you, okay, and confirmation that if I tell you something to be careful, listen to me, okay? I don't want to see anyone in here get hurt, because I know you don't listen. You're not supposed to be trading with live funds in here. And sometimes you hear me say something in a review, and you're like, well, he ain't going to know I'm putting this in with a live account. And then all of a sudden, if you did something wrong, okay, or you just put more emphasis behind what I felt, which I didn't have any strong feelings except for trading down here, and I felt that we would get a reasonable tradable bounce in here. Was I expecting this type of move? No, absolutely not. I would never sit here and tell you I expected all this. I knew something was coming, something big, and it just, I couldn't pin it down on what it was. And now looking at it here, it's just an experience factor, like a hunch. And there's nothing that I could say, hey, look, this was the attributing factors behind why I said that. It's just, I've been doing it for so long. I felt like there was something brewing, and I just didn't know exactly what. And I had told you very candidly, I wasn't touching cable. Okay, I wasn't touching it. I didn't trust it, and I didn't want to put any kind of information into this pair, knowing that there's the potential for something bad, that could happen if you either did something wrong or if you didn't use a stop loss. I mean, imagine if you went down here and you sold short and you didn't put a stop loss on, and then you held on to it here and think, okay, well, it's going to return. And then here, it's going to return. Yeah, it's going to return up to 127. It's returning. Okay, that's 500 pips against you. So that would be terrible. And it would be your fault. No one else's fault but your own. So, but going through that, it would be very easy for someone to say, it's your fault, ICT. And then it completely makes this condition and relationship that we have toxic, because you did something you weren't supposed to do. You're supposed to be in here with a demo account. You can't get hurt. You can't make money. You cannot lose live funds if you're trading in a demo account, because you're learning how the markets behave. I'm teaching you price action. So anyway, this is really, really encouraging, and I'd like to see some kind of a continuation up on Eurodollar into next week, because this has moved a lot, and hopefully we'll get some kind of sympathy action in Eurodollar. But nonetheless, let's drop down into an hourly chart. Okay, so we have price trading up into this bearish order block. I mentioned that, and we have a breaker here. Low, high, lower, low, and it was consolidating here. I mentioned that we would likely go lower, and it didn't even try it. It didn't even try it at all. It just completely ran the other direction up into the bearish order block, which is this level here. And then we had a fair value gap right there. Okay. In my personal journal, the only thing I'm annotating is the fair value gap in here and the unwillingness to go lower here. Now, yes, there's a big pocket of sell side liquidity resting below these equal lows. I'm focusing on the fact that we had that slip in dollar lower, and we had the fair value gap in here, and all of the magnitude is really attributed to Brexit. So it's not, if we didn't have Brexit going on, this move would have never been like this at all. We probably would have had maybe 110 pip move at best. But to have 500 plus pips move here, all of this is just a complete and utter crushing on shorts on the fund level for cable. Okay, so British pound, all the large funds that have been short on British pound, they got annihilated. This is just all completely and utter devastation for them. And remember what I was teaching you this particular week. I said, when we look for moves, okay, and there's a run on liquidity, we want to see speed. We want to see speed and distance. The reason why that signature is the things that we're looking for is because if it does not move fast, and if it doesn't move a lot of distance, the traders that have their liquidity above old highs or below old lows, they will have time to think about this and say, no, I'm going to collapse my trade. If they collapse their trade, it removes that liquidity, or it reduces that liquidity. So IPTA is programmed to do these very things here. And you see a huge macro view of it, or a macro example of it, where it covers a great deal of distance to get large fund liquidity. Okay, above this high here, above this high here, above this high here. It did not waste time at all. Ran aggressively and aggressively again. So don't think that they're not targeting large funds. They are. That's the cannibalistic side of these markets. They let the trends go for a little while, and it builds up liquidity, it builds up liquidity, it builds up liquidity. But at the turning points, they're the smart money. They're the ones calling the shots. And when they turn it, they run to logical levels where large pool of large fund liquidity is resting. So if they bought down here, which obviously in hindsight we can clearly see that, where would they be willing to take their longs off? Above intermediate term highs. Let's go to a 4-hour chart. So above here, and above here. Look how fast they get above it. Did they give the large funds any time to change their model or say, okay, look, maybe we're wrong. Maybe it's not going to continue lower. Let's collapse that trade. No. See, in the books, what it is told to you as, this is a short covering rally. So that's what that calls that. No, it's not. It's attacking large fund liquidity. They were short here, they were short here, they were short here. Okay, and continued from back here, they trailed their stop loss to here. They're large trend following models that large funds use. So as price dropped lower and lower, okay, that liquidity would build up at these levels here. Look how fast it runs to that. This is the same phenomenon that I was explaining to you on a 5-minute chart, explaining to you on a 15-minute chart, and on a 1-minute chart. Speed and distance. If it's going to run liquidity, it's going to look like this. You do not want some humdrum, really run-of-the-mill, middle-of-the-road type volatility where it just slowly drifts down to a liquidity pool or slowly drifts up to a liquidity pool. When they're running for large funds, okay, when that liquidity is the target, it looks like this, because they know they do not want that pool of liquidity to evaporate by the collapsing of the trade. So this run is not short covering rally. This run is a run on buy side liquidity. Do you see what they've done? In books and talking heads, they give you some bullcrap reason as to why it's happening. Oh, it's just a short covering rally. No, it's not. And it's easy to take that and believe it because, oh yeah, they had a Brexit deal, so therefore this is going to be a short covering rally. People are going to get out of their shorts and look, it runs up. No, it's not. It's a run on the buy side liquidity for those individuals that are long-term bearish on cable. Who's long-term bearish? Large institutions, large fund traders. And all of them have been tagged and rated. Okay? I don't believe they're done. If we go out to a daily again, we have this pool of liquidity here. And I think that that's going to be the next intermediate term draw on liquidity. And then we have smaller one balance there. So we have a little bit more upside for cable. A lot more upside, I think, in Eurodollar. But in here, we covered a lot of distance already. And it's probably going to just hang around in here. It may come back down into this high, retrace a little bit. It'd be better if it didn't really. And just start to take off and go higher. Gold. This thing is acting a little weird. I said on Twitter, one of the students said that not sure what gold was going to do. I said it makes sense to me that they would take it lower, knock out some liquidity, and then send it higher because of the dollar index. Dollar weaker, so gold should be stronger and going higher. We came back down below these equal lows. I'm sure at this time when it was a bold bearish candle, folks were looking at that thinking, okay, it's really going to keep going lower. I love the fact that we came back above these equal lows here. So I'd like to see dollar keep going lower and then send this thing higher. We have relatively equal highs. So buy side liquidity pool resting around that 115.58, 1,560 and 1,558. Those two levels, I like them on the upside. Think of Eurodollar. Okay, think of Eurodollar. We had equal lows. We went lower, took those out, rallied up again. Okay, it's going to go higher. One more time, they ran below these equal lows, going higher, and then they sent it down on Friday. It looked bearish, and now we probably are going to move higher, like the Eurodollar did in here. Okay, think of all this action in here on Eurodollar as the same that's occurring here on the daily. We just got to scrunch it up. Okay, think of it like that. So all of this price action here, this whole fractal here, think of it in the same manner that the Eurodollar was here, and not all this, but all of this in here, same type of market structure that's occurring in gold on the daily here. So we could see this thing up in the 1700s, in the coming weeks and months, if dollar remains weak. Okay, that's what I'm anticipating here for gold, but we'll see going into next week. All right, so that's going to be it for this week, folks. I will talk with you all on Monday. If I see anything on Monday, I'll prompt you and point your attention to it. And otherwise, I will talk with you all by way of Wednesday's midweek review in the ICT mentorship. And enjoy your weekend. Be safe, and I'll talk to you next week.